going on, guys? This is David. Welcome back to the channel. As always, remember to like, share, subscribe, hit that notification bell. I would really appreciate it. Helps the channel grow. Helps the channel grow. So, all right, let's get right into it. We had an interesting week in the stock market. We had a lot of earnings, big tech, Apple, Amazon, Google, um, all reported earnings this week. So, we'll touch on that in just a second. Let's take a look at how the Dow performed. So let's pull up 1 second here. Remember, as always, our number one rule: do your own research. I'm not a financial advisor. Do your own research. So let's see here. Let's take a look at the Dow. On Friday, we see that the Dow was down 127 points. And for the week, the Dow is down just 58 points for the week. So you see slightly only 0.17%. And year to date, so far, the Dow is still up 2%. So that's good. It's still a good start to the year so far with the Dow Jones. And then we go to the S&P. On Friday, you see the S&P was down 1%, down 43 points, unfortunately. But for the week, up almost 2%, up 80. And year to date, the S&P is up 8%. So still a strong start to the year, 300 points, 312 points to be exact. Still a strong start to the year for the S&P. Then we go to the NASDAQ. On Friday, down 1%, 193 points. We'll get to why, everything was down. But for the week, the NASDAQ was up 4%, up 474 points. I'm not mad at that at all. I've stated before that I'm still very heavily invested in the NASDAQ with the tech. So I'm happy to see the NASDAQ making some gains this year because it was a rough 2022 for sure. And year to date, the NASDAQ is up 15%, up 1,600 points. So, I'll take that any day of the week. So we see how the market is doing. Let's see here. 1 second. So you see Apple, Amazon, Alphabet, which is Google, had a pretty painful earnings report. Hence why you see some of these stocks that were down on Friday. I think Apple was the only one that actually, investors actually liked. And, their stock actually did pretty decent. So, but let's see, you see Amazon, Alphabet, shares fell 8.3% and 3.3% on Friday. Narrow the NASDAQ's 2023 gained 15%, which we just looked at. However, Apple gained 2.4% as the world's most valuable company said it resolved supply disruptions that have held back iPhone sales. So, and you see some other takeaways. Amazon and Alphabet shares fell while Apple rose after the three tech heavyweights posted mixed fourth quarter results. All three said that their pruning costs as slow global growth hurts their business. Apple missed estimates and posted a rest sales drop, but said it's resolved an iPhone supply shortage. Alphabet, which is Google, reported a decline in Google's ad revenue, while Amazon posted its first annual loss since 2014. It said cloud computing demands continue to slow. So overall, a slow earnings report for the tech companies, and we saw that reflect in the prices on Friday. So, we'll see if that's going to be a long-lasting effect for those companies over a long period of time, or will they kind of bounce back in the next week or so? So that'll be something interesting to see. I'll definitely keep my eye on. For the record, I do have shares of Apple. I do have shares of Amazon. I do have shares of Google. I'm still very much in the green on all three. I've held all three since 2016. So, um, you know, I'm still looking pretty good on those. But I'm heavily invested in those. Those are the tech companies, that are traded on the Nasdaq. So, or they heavily impact the Nasdaq. So, I'm hoping for positive news or positive outcome of their stock prices going forward. So it's a pretty rough 2022, but I've been holding for almost 7 years now. So like I said, I'm still well in the green, and I don't plan on selling any of those shares anytime soon. So just FYI on that. And let's take a look at something else here that had an impact on the market on Friday. Let's see here. And you would think that this would be kind of a positive impact, but it's funny how things work, man. Jobs report shows increase of 517,000 in January, crushing estimates as unemployment rate hits a 53-year low. 53-year low. The unemployment rate fell to 3.4% versus the estimate of 3.6%. That's the lowest jobless level since May 1969. Leisure and hospitality added 128,000 jobs to lead all sectors. Other significant gainers were professional and business services, 82,000, government, 74,000, and healthcare, 58,000. Wow, that's a strong jobs report. But however, the crazy thing is strong jobs reports can have a negative impact on the market, right? And why do you say it's a negative impact? Well, unfortunately for investors, they look at it as it gives the Fed more room to increase interest rates and things of that nature. So the market doesn't like that. And I think that's why we saw a turn after the, investor was able to digest the job report. I think that's why we saw a turn in the market and why the market kind of ended in the red on Friday. But for the economy, for them to keep saying that we're in a recession, which we may be, this is a strong jobs report for January. And, you just got to call a spade a spade. So, but we'll see how the market, reacts going forward in regards to the jobs. So, but yeah, all right, let's get down to the nitty gritty. I know we are in week 5 of these challenges. I don't think I updated the Jeopardy challenges this week, so let's take a look at both of our challenges this week. So bear with me here. Boom, here we go. Let's start from Friday. As you see, we've completed week 5 of the SCHD challenge, SCHD/VOO. We invested $5 in the SCHD. We invested $5 in the VOO because it was week 5, right? You see what we've done for the previous weeks: $1 for week 1, 2 for week 2, 3 for week 3, 4 for week 4, and so we are up to $30 total in this year, for the year in this investment challenge. So by the year's end, we're looking to have over $2,700 invested in this challenge, about $1,300 for both SCHD and VOO. So it's going to get real interesting as these weeks pile up. But for right now, we're on week 5. We've completed the challenge for the week, and we're looking pretty good so far. Also completed during this week is our Jeopardy challenge, JEPI and our JEPQ. We are doing $5 a week, right? I didn't do anything first week of either or. I started the Jeopardy challenge week 2, started the JEPQ challenge last week. So this past week we did $5 into each. Weekly total of 10, and so far our yearly total amount is $30. So that's what we're doing. Each week is going to be $5 into this challenge. Um, and for the record, I do invest more throughout the month. Sometimes on a biweekly basis, I have some other dividends that I don't reinvest. I use them to buy more JEPI. I also have a monthly $25 investment going into JEPI. Also, we just had dividend payments. They're not scheduled to hit technically until the 6th, which is Monday. But if you go to your Fidelity, if you have Fidelity, you see that they already hit and they've already been reinvested. So I had dividends that hit for JEPI and JEPQ that were reinvested already. So those are ways that we're increasing our investment into these companies that we like. So not only do we do, like for JEPI, I do the weekly challenge. I also invest bi-weekly. I also have the monthly $25, and I also reinvest the monthly dividends. So, I want to, I think I've added over 2 shares so far this year, and JEPI's trading around $54, I believe, something like that. So I've already added 2 shares just by increasing the investment into this particular fund. So we like JEPI, we like JEPQ. We have a weekly challenge of $5 each. So next week it'll be week 6 for both challenges. SCHD, VOO, we're going to invest $6 next week, and we're going to keep those challenges going all the way throughout the year through week 52. And I'm, like I say, I keep saying it, I'm excited to watch these positions grow. It's definitely going to help not only my portfolio, it's going to help my passive income. So each of these funds pay dividend income. SCHD and VOO pay quarterly. JEPI, JPI, and JPQ pay monthly. So we're increasing our passive income every time we invest into these companies. JEPI and JEPQ, their dividend payout this month were lower than what it has been the last couple of months, but it's okay. That's going to happen, and we know that. That's not unexpected. Hopefully next month it goes back a little higher than what it was the previous month. So, but that's it. That's it for this week's video. I want to give you guys an update on the challenge. We're still going strong. We're going to continue. We're going to update next week on those challenges for each one. And we're going to keep the ball rolling. But that's it, man. Don't forget, if you guys want to make a donation to the channel, you see the information below, Cash App or PayPal, either or is appreciated. Remember, we only have one rule here. Do your own research. Do your own research. I am not a financial advisor. I just like talking and trading stocks. That's my main thing. So, but that's it. That's all for today's video, man. Remember to like, share, subscribe on your way out. And I will talk to you guys later. I'm out.